Welcome back to the channel, folks. This is daily update from MULN stock, and today we got very lucky because it bounced off of the 18 cents that we had from October. This is a demand level, and for the folks that don't know what demand level is, demand is basically where a lot of buyers are sitting and trying to purchase a stock. However, there was a demand level at 20 cents which was broken, and I think we have a little bit of an issue that I've been talking about in my previous videos, which I'll talk about in a second, that there's going to be a limitation on this uptrend, okay? Because there's a lot of liquidation that is happening here, that a lot of folks are sitting here trying to sell the stock to you because they already exercised their warrant. So let's take a look. The very first one is the CFO, Jonathan New. He's the CFO of the company. He just exercised 159,000 shares, which means that he's going to sell it in the market, which is going to be part of dilution as well. So he's trying to make money as well on this. Now, we also had a news that came out the other day where it says David Rice Party Limited, what do? They also exercise their warrant for 178 million shares. Now, this is, again, when they're exercising these warrants, what they're going to do with the shares? They're going to sell it, of course, at the time when they exercise this. It was on March 1st. And because they knew March 7th week was going to be a good week and Bollinger is going to demonstrate the truck, MULN was going to get the extension, so they exercised the warrant. And what they're going to do with the stock? Of course, they're going to sell it. And this is why we see a major decline on the week that we thought it was going to be phenomenal. We saw a major decline. And what happened? Yesterday's filing that came out, Acutus Capital exercised their warrant for 338 million shares. And that happened 2 days ago. And you saw a major decline from last 2 days. However, now they're letting it breathe a little bit. Of course, they can't really go ahead and sell all these stock at once, because if you take 178 million, 338 million, 159,000, not that much, but if you take 338 million and 178 million and sell it at once, the stock is going to just gone. It'll be gone, right? Like, there won't be any much demand left at that point, because you're just pumped almost 400 million shares in the market. So they can't do that. So they are doing in sequence. And what they're going to do is, in my opinion, they're going to let this price come up a little bit, 20 cents maybe, and then sell some, bring it down, maybe hover between 18 cents and 20 cents, or maybe let it be up to 22 cents or 23 cents. We'll have to watch and see. But again, the most order flow that are coming in from the small retail investors. If you see here, small investors, 24%. Also, one thing to be noted here, that small investors are also coming out of the position as well, because a lot of selling orders going on for small. Small is basically our retail investors, okay? Mediums are medium brokerage firms, and large is a smart money. Smart money is really not into it in terms of, heavily invested in the company, and that is true. Let me show you guys the institutional holdings right now. The institution holdings for the stock right now is 6.30. Again, they're not heavily in the stock. They're very minuscule. I think they still want to keep, some money in the stock. Again, somebody asked me, why would institution invest in the company if the company is going to go bankrupt? Look, every company, every portfolio, from personal experience, has a budget where, it's called sort of like a gambling budget, okay? They invest in the new businesses or volatile stock that, that could potentially make them a good money. So a lot of companies invest in them. Very big brands usually invest, like BlackRock, Vanguard, State Street. These are the big companies that have a major portfolio, and they have that sort of allocation where they can actually spend that much money. So I think they're just keeping their foot in there just in case the stock takes off. But financially right now, they're looking not that bad in terms of, financially. They do have some money left for another 2 years. So this is a plus point. And this is why I think these guys are exercising their warrant and trying to sell you the stock. And again, of the purchaser of these stock is going to be mostly retail sellers, because I think retail sellers are the one that are pumping the stock and hoping for that short squeeze. I don't think the short squeeze is going to happen anytime soon, because you have almost 400 million shares sitting here trying to be sold. And if only the short squeeze can happen if there is no inventory left, okay? At that point, if somebody's shorting the stock and somebody's pumping the stock, at the end of the day, the shorter has to cover their shorts, and which is going to eventually bring the price up and up and up. And this is what happened in GameStop. So in this case, if you already have 400 million shares available from these party holders, then they can actually sell you the stock. So again, the short squeeze seems to be far off right now, but again, they're letting the stock breathe right now, which is a good sign. I hope that, thankfully they didn't let it go to 15 cents or 10 cents. The way they were going, I thought they're going to bring it down to 10 cents, but it seems like not the case here, and they're letting these small investors come in and spend the money. Again, I believe it's going to go to 20 cents and then come down, but this 18 cents, 20 cents is going to go on for a while. We'll have to see and watch, but I'll keep you guys posted. I'm making daily videos. If you're not subscribed, do consider subscribing. I'll talk to you guys in the next video.